Traders, looking at the euro dollar daily time frame, we've got this level back here that this has traded through. Just mark that up. Okay, so what's happened here is that this has picked up liquidity that's resting above this range, and the liquidity above here prior to this expansion to the downside, it's hit the liquidity whatever's above this, but more importantly and closer to home, it's hit these buy stops up in here with a vengeance. This is a big level, right, and big liquidity sitting up in here. I'm expecting this to react off this level, so you want to be careful. Don't go jumping in here long, and there's a couple of reasons why you don't want to be buying. Now I'm generally looking for the pullback. Let's just go down to a 4-hour chart. In fact, before we do quickly, I'll just mark this red candle up here. We have a balance area that accumulation range where this move originated, and we also have this red candle back in here as well. So both of these ranges are key levels of interest. Just consider the possibility actually that this price swing is traded back into, we're looking at the equilibrium in here. We've also got the highs across here that could be of interest. That's definitely a level where this could react. Okay, so we'll just mark that up on the daily and then go down to the 4-hour chart. Now, a couple of things to consider on this time frame. All right, so I'm just going to be a bit more precise with this. We're going to grab this red candle, high and low of the candle body, and back here I'm picking up this red candle, high and low. Okay, so just the biggest red candle prior to this move. So we've got this entire range value area that's a point of interest, and also down in here on this time frame you have this accumulation range, and we also have this green candle. There's nothing left and right of it on the chart, so what we need to do is mark that up as an imbalance. So this is a bullish imbalance. It's one-way trading bullish, and the market has it created this imbalance, right? So I'm expecting the market to trade back down, looking to rebalance. So we have a combination of the higher time frame order block and this 4-hour order block, so we could mark that up. Okay, so we've got this nested support zone under here. Key area is going to be, if we pick up a Fibonacci, retrace, low, high, down into the equilibrium, which is 50% of this price swing here. You can see my red line, okay, so I've marked it up red, and then we've got the 61.8, so that could be a point of interest for a buy. However, in saying that, just be a little bit careful. We've got relative equal highs here. What I'm expecting is for price to possibly spike up above here, hit the liquidity that's sitting above this range, and make a move back down into our points of interest. The other thing to note and mark up on your chart is going to be this thin candle back in here, 4-hour time frame, green candle, nothing left and right of it, so we've got this bullish imbalance as well here. Now, the market is going to be hunting two things. It's seeking liquidity. So you have a liquidity pool sitting up in here in the form of buy stops, and that's what's being targeted currently. And I'm thinking above this range here, a little spike up, possibly, and then a pullback. Okay, that's what I would like to see happen. We've got the London Open, the New York Open, so just, look, you don't want to be buying at a premium. Okay, that's the bottom line. See, this has expanded. Get the Fibonacci again, low to high. Look, okay, this is in a premium at the moment, so you definitely don't want to be getting involved long at that point, especially trading into resistance like this. So the pullback would be an ideal opportunity now. Again, there's this imbalance in here. So the market's looking for two things. One, liquidity. It's hit the liquidity above here. So now we want to consider where there's resting liquidity, where this could target. In other words, we're looking for areas where big money might need to move the market to be able to pair their orders. This is long. This is bullish. We're in a bullish trend, right? You can see that. So if this is bullish and they need sell side liquidity to buy, well, it's resting all through here. Right? You've got this bullish move, so you have a bunch of sell stops sprinkled all through this level and under here. So there's sell side liquidity sitting all through this price range here, right? And that's a target for this to move back down into, to soak up these sell stops. Getting a little bit of a bullish move here. Just be careful. Right, again, I would be buying at a premium. Now, the other thing that you want to consider is it's a possibility this moves further back. You've got 3 levels to consider mainly, okay? So under here, let's just call that a liquidity pool. And down here, all right? So what we're looking at are the lows and these areas under the lows here, where you're going to see sell-side liquidities. Sell stops resting under these ranges, so liquidity pool, right? So the target for this to pull back is either in here, this green zone, or down into the liquidity pool, right? We're looking at this entire range. But price action is going to play out, and you're going to see this rotate. You're going to see the pullback rotate at one of these levels. So you want to have these marked up on the chart as a point of interest and then wait for price action to shape up. I'll show you what I'm talking about. Then we've got this red candle here, point of interest on the 4H, nested, bullish order block. We'll call it support. And I'm always looking at where the imbalance moves into the order block. The imbalance here reaches into the order block. So this level through here and here, firstly, and then if it pushes through here, then we look for these lower levels and under here as well. Now, the thing that you're going to be looking for is going to be something like this. So we go down to a lower time frame, 15 minutes, and then I'm going to show you something else. Well, I want to see a bit of a spike up. Okay, I want to see the move back down. And wherever this lands, it's going to hit support, and you want to wait for something like fake out, a shakeout, and a trade with speed, and then look for the break of market structure bullish then to buy. That could happen here, it could happen here, all right? It could happen a bit lower, but here's the thing, it could happen down in here. We want that price action, and you want to catch the rotation. So how to do that? Right, let's just delete everything and I'll show you something. Take that back out to a daily. Right, we're on a 5-minute chart. This is using our indicators here. Okay, consider that this has moved into a key. See the yellow line, the yellow dotted line? So that's the previous daily high or low. Okay, so it rejected off this level. So you want this to be trading, if it's bullish, into a key resistance level like this. Spikes through it, hits the stops. Now let me show you this. This price action that I was talking about, it comes in all shapes and sizes, or variations I should say. Have a look here. See the range? You get the range. This is what I'm talking about. Range, fake out, it draws in sellers, more stop losses get placed above, they hit the stops, all right, and then it trades south. This is the only chart pattern I'm interested in, apart from a 3-chart, a 3-drive pattern, I would think, and double tops and bottoms. And then you're looking for this there to trade off with speed, which it does, and then you catch the retrace and you're in. That's counter trend. You probably want to stay away from that. But more importantly, when we go down here, here it is again. You got this range, but this time around, you know, there are variations to this. It dipped a bit lower, but you get this false bullish move here that entices buyers in. Stop losses go under. Okay, so their stops go under. They hit the stop. Notice the other thing as well. See this yellow line? And this yellow line, this is a key support zone. So it's traded from this yellow line here, resistance, down to this range. And you can mark that up. You can look left and pick it up, but that's a previous daily high or low to another previous daily high or low. You want the move into support. You want, and this is a 5-minute chart, you want to see on the chart this green bar, and you want to see the last 2 bars on here, green. So that's the higher time frame. You know that the higher time frame is bullish. You want to see these candles turn red and trade south like they have done. This is the pullback on the 4-hour chart we're looking at here. And then you're looking to catch the rotation. We then go off this signal. This is a shift in the trend. And this one is a break of market structure. We're looking for the break here, retrace, buy. Or if you're a bit late, retrace, buy. So with the euro dollar, what I'm going to do now is I'm going to go down to the 5-minute chart and I'm going to be setting these 2 alerts, and I'm going to set up the alerts to notify me on my phone through the TradingView app, because I want to catch this pullback tonight. It's the London session. I'm thinking that it could look, if it trades north and leaves us behind, let it go. But I want to see the pullback into equilibrium like this, exactly like this, and then I want this to bring me into the chart for an opportunity to get long. Right, so this is the setup that I'm wanting. So what I'm going to do now is I'm going to set up this trend channel alert on the 5-minute cloud break one, once per bar. I want it to make a bit of noise, and it's going to notify me in my TradingView app on the phone. I'm going to go create once per bar, right, and then I want cloud break 2 to go off as well. And that's going to give me these alerts. Now you want to watch out, because you're going to get that. I don't want to counter trend trade it short. So if it's a red break alert, I'm going to let it go. But if it's a green one, after it trades south and we see it move with the higher low like this, break of structure or shift in the structure, I want that alert. And then look at the outcome. Now, some of these can give you some really nice results. So again, coming back to here, now here's a bit of a move up into, as I mentioned earlier, like this previous daily high or low here. That's taken out liquidity. Let's just let this thing rotate. You could counter trend trade it short if you wanted to take the risk, but I'm preferring, again, to see red candles kick in, a pullback, and then the rotation wherever it lands. You ignore these, by the way, because this is trading sideways. I want to see red bars, as I showed you before. Stay out of that. Red bars shifting from red to green. Okay, so that's the euro dollar, and you're going to find that this strategy will give you a fantastic entry on a regular basis. Here's an invite to join VIP, by the way. Tradingwithanthony.com. You can click on the Forex signals. This will give you video from previous weeks and recent results. We've had a couple of tough weeks with the yen interest rate rise out of nowhere. Kind of took everyone by surprise, but we're recovering quite nicely into this week. And here's an option. Well, the monthly sushi train or my favorite Indian restaurant. Just shout me to lunch once a month, guys, and you have exceptional value. Ignore these. I want that. Okay, you have to have a strategy, and it involves these red candles pulling back. So have a great day, and we'll see you in the next video.